Welcome everybody. My name is Matthew Lewis and I'm a Director of OpenCorp and I'll be your host this evening for this webinar. Thank you for joining us. We've got a lot to get through tonight. I appreciate you're busy, so we'll try and jump straight into it. We're here tonight to talk about OpenCorp's latest property investment fund. The fund itself represents a new era, not just for OpenCorp and our investors, but for the Australian people. This is a one-of-a-kind fund, and we've spent 16 months working through this fund with ASIC to ensure that it's a fund that is compliant for our investors and that meets all of our investors' needs in the future. The purpose of the webinar is for me to provide you with information about the project that's associated with this fund. The project is located in Albion, Queensland. The suburb is about 5 kilometres north of the Brisbane CBD. I'll provide you with a bit of information about that later on. Now, you would have received an email with our product disclosure statement in the last few days. If you haven't received that, please let us know, and one of our investment consultants will ensure that you receive a copy of the product disclosure statements within 24 hours. The PDS, or Product Disclosure Statement, is a really important document. There's a lot of detail in it. That's absolutely critical because we need to pass through independent review with independent lawyers and independent accountants. And it also needs to be compliant with ASIC. Now, that's a great thing for you as an investor because it means that we've done a lot of due diligence and that there's been a lot of checks and balances. Any number that we're quoting in that in the product disclosure statement has to have been verified before we can publish it, before we can talk about it. Now, because the document is so detailed, my goal tonight is to simplify as much of that detail as possible. I'm going to be talking about the key features of the product disclosure statement and the investment in simple language so that you can understand that. Sometimes I'll reference parts of the document so that you can look those up later. If you've got any questions at the end, you'll be able to contact our investment consultant and work through any of those questions. Again, our job is to help you work through the process. We've been through it hundreds of times. We can make it as simple as possible for you. So tonight, I'll be going through a little bit of a background on OpenCorp, who we are, what we do. There's a lot more information on our website that you can look up, as well as in the product disclosure statement. I'll also be talking about the project in detail. Now that means the timelines, the returns, so the financials, the risks associated with a development like this, and how we report to you if you do choose to invest in the Albion project. I'll also run through the application process at a very high level, and again, our investment consultants can talk you through that in a lot more detail. And as I said, at the end of the presentation, you'll be given an opportunity to ask questions, either of me through the webinar or through our investment consultant, where you'll be able to get your questions answered directly. So thank you for joining us, and I appreciate your attention for this webinar. Now, one thing that I do have to work through is our disclaimer, so forgive me if my voice goes a little bit monotonous, but it's an important part of the product disclosure statement and also this presentation. So the issuer of units in the Open Access Fund is Open Corporation Funds Management Limited. We do hold an Australian Financial Services licence and we are the responsible entity of the fund. Neither the responsible entity nor any of its directors or associates guarantees the performance or success of the offer, the repayment of capital or any particular rate of capital or income return. What we do provide, obviously through our product disclosure statement, is a very detailed analysis of the investment that we've worked through. Now, continuing on with the disclaimer, we are not authorised to give personal financial product advice. Our licence permits us to give general advice and advice about our investments. The product disclosure statement contains important information, however, it does not take into account your investment objectives, financial situation or particular needs. Accordingly, before you invest, you should read the PDS and any supplementary PDS website updates and attend our webinar carefully and in its entirety, and if you consider it necessary or appropriate, obtain independent financial and taxation advice about whether an investment in the fund is suitable for you. Any mention of our past performances in this presentation is not an indication of future returns in this fund, and every investment should be considered on its own merits. Thank you for bearing with me as I work through that. It's obviously not the most interesting part of the webinar, but as I said, a very important one nonetheless. So just giving you a little bit of information about OpenCorp. We do have a history of successful projects. In all, we have 12 completed projects over the last 6 years, and those projects have achieved annualised returns, or an internal rate of return, of 24.52%. Now that's combined with our current forecasted projects as well, of which there's another 10. In total, we have a project pipeline exceeding $500 million in end value. So that means, obviously, if we developed all of our stock today, it would be worth $505 million. That pipeline has an anticipated completion timeline of about 3.5 years. So most of that stock will be working through over the next couple of years. Some of the projects are already under construction, others in planning. We're diversified across a number of different markets. Now, this is obviously very important for those who do invest with us as well. Geographically, we're in Melbourne, Brisbane and Perth, and I'll talk about why that's an important factor very shortly. And we're also in different product types. So we have apartment projects, we have townhouse projects, and we have land estates. Now, apartment projects make up about 70% of our overall pipeline at this point in time. 15% goes to land and 15% townhouses. So again, it's important to understand that we do have a very strong knowledge in the apartment market, and particularly in the Brisbane market, where a lot of our projects are situated at this point in time. Just a couple of our key projects to demonstrate, I suppose, some of our development strategy. This project on your screen now is Hemingway, which is a project in Chermside, again, north of Brisbane. It's about 4 or 5 kilometres north of Albion, so we know that market very well. As you can see, this project and the building itself dresses up very nicely, and that's one of the keys to our strategy. We've got city views in this project, and the Chermside market where it's situated is really maturing. So our strategy here has been to deliver a building that provides a higher standard of visual amenity as well as a better internal product than all of the competitors. We've got a rooftop pool, a rooftop barbecue area and terrace, and we've got a terrace between the two buildings that we're building in this development. Now, when I say that we're going for a premium product over the market, our strategy is actually to deliver a product that we can sell at the same price or just slightly above our competitors. We don't want to have to charge a premium for buyers to get into our project, but we want to provide them with a premium product, and that's consistent with all of the developments that we're doing around Australia right now. And I guess we see that as a pretty good recipe for success when marketing. If you can sell a better product at the same price, then you're obviously going to attract a broader market than your competitors. We also try to have as much variation in product as we can. So this project has a mixture of 1 and 2 bedroom apartments, as well as 2-bedroom terrace houses, which you can see in the picture on the top right. And we have the ability to convert 1 and 2 bedroom apartments into a 3-bedroom apartment. Again, providing as much variety and variation in product as possible helps us to attract the broadest segments of the market and maximises our sales results. Again, I won't dwell on these projects because we do need to get through quite a lot tonight. I appreciate the time that you've all tuned in. This project here is called Citro. It's located in West End, in a suburb about 1.5 kilometres west of Brisbane CBD. You can see in the top right corner the picture that shows the views from the rooftop, infinity edge pool, number of barbecue areas, spaces for people to catch up. We've got a lawn there with an all-weather television so that residents will be able to catch up and watch the football up on the rooftop deck on a Saturday evening before perhaps going out for drinks with friends. We've really focused on trying to bring a communal element to apartment living so that the residents really connect with each other and enjoy having their friends over. That obviously converts to better values, as well as for those that are buying as an investment down the track, ensuring that they're going to attract good high quality tenants that will pay rent, good rent to be in there, and who'll deal with obviously rent escalation over time. We're very mindful that we want to deliver not just a great financial return to our investors who are investing in the funds, but also to the buyers within these projects. The final project view that I'll give you, this one's a project called Quayhouse. It's located in the suburb of Port Coogee, which is in Perth, approximately 4 kilometres south of Fremantle, if anybody knows that area. It's a boutique project located on a very, very popular part of the coastline. And again, we've gone for a higher quality of finish than our competitors. We've provided some rooftop amenity. I must admit, not all of our projects have rooftop pools, but the 3 that I've shown you do. We've also gone for herringbone floors, Caesar stone bench tops. Again, just providing that little bit extra over and above the competition, and we're not selling it at a premium. So we're getting faster sales in this project than any of our competitors right now. So the OpenCorp acquisition strategy. Now, we use the term map. So when we're looking at where we should be acquiring sites or acquiring investments, we look first at the market, being a capital city, next at the area within that market where there might be constraints on supply or excess demand, and we obviously want to come in to try and meet that demand, and then we look at the property. So you can see here, the first view, we're looking at the capital cities. Now, our assessment of the market at the moment, obviously there's been a lot of press about the Sydney market being overheated, and it's been on a very strong boom for the last couple of years. That's a market where we're not active, and we're certainly not aiming to get into the Sydney market in the near future because we see that boom coming to an end. Not sure whether it's today, not sure whether it's in 12 months, but we're obviously very mindful of market cycles. Perth, obviously it's just come off a boom, so we're very cautious about Perth at the moment, although we see that in the next 12, 18 months that will probably be a market where there's good value to acquire sites. In Melbourne, again, we are in the middle of a boom at the moment, but different parts of the market are responding differently to that boom. There's been a fair bit of supply come through in the investment markets, so we're actually quite cautious about being in a market where there's going to be a lot of investor stock. What we do have a lot of confidence in Melbourne is the owner-occupier market. Again, we're seeing very strong numbers going to auctions in the established market. Owner-occupier focused buildings are also selling extremely well, much better than the investor-focused buildings right now, and new land is in very, very high demand and short supply. So we're seeing our land estates in Melbourne that are still going very, very well, and we anticipate that that's an element we'll continue to focus on. Within Brisbane, the Brisbane market's a little bit behind the Sydney and Melbourne market right now, and the next slide that I'm going to show you will show you just how starkly the contrast between Sydney and Brisbane is right at this point in time. But the Brisbane market is seeing a lot of demand coming through at the moment. There is a fair bit of building activity as well, but there's been an underbuilding in Brisbane for a number of years, and we're starting to see that demand really starting to pick up. Once we've picked the capital city that we wanted to invest in, we then look at the area or the suburb, and again I'll be explaining why the Albion project and the Albion suburb is of particular interest to us. And then the final part of the map process is finding the investment or the property that we want to focus on. And again, the project that we're talking about tonight, we've acquired with a planning permit, and we think that the product mix is right for owner-occupiers as well as investors, and they're both very strong active markets in Brisbane right now. So I mentioned that I would show you the contrast between Sydney and Melbourne's prices. Now this graph here is courtesy of National Property Research Co, and what it shows us is, I'll just talk through the different components. So you're seeing a blue line, which is Sydney's price relative to Brisbane's. Brisbane's is the straight black line, and if you look down the right-hand side, you can see the various values. You can see that 0, that's the benchmark of Brisbane's price relative to Sydney's or Melbourne's. And the red line is Melbourne's price, although I think it probably comes up a little bit purple there. So you can see right now, if you look at September 2015, and I'll just try to get a pointer up here. In 2015, we can see that Sydney's price is actually $405,000 higher than Brisbane's price in September 2015. Now, if you look back over the last 14 years, that's
the biggest gap that we've ever seen. It's about double what we saw back in 2003. Now in 2003, when Sydney's price was about 225,000 above Brisbane's median house price, we saw a huge net interstate migration, people moving to Queensland, and particularly southeast Queensland, in droves. Why did they move in droves? Well, if they could cash in their house in Sydney, and back then the median house price in Brisbane was about $220,000, they could sell their house in Sydney, pocket the money, buy a similar property in Brisbane for half the price, and still have $220,000 in their pocket. There was also a lot of construction activity happening in Brisbane at that point in time. So that activity obviously created jobs, and a lot of trades were moving out of, or tradespeople were moving out of Sydney and moving up towards southeast Queensland. Similarly with Melbourne, we saw strong net interstate migration. Queensland, obviously, and particularly southeast Queensland, has the other benefit of a great lifestyle, people living out in the sun, close to beaches. So when there's a huge price incentive for people to relocate to southeast Queensland, and there's a lot of jobs and job stability, we see that net interstate migration pick up. Now, if you look from 2010 to 2015, obviously the Melbourne and the Sydney property markets were going very strong. There's a lot of construction activity over the last 5 or 6 years in those markets, whereas the Brisbane market stayed pretty flat. In fact, prices didn't really move from 2007 when they were almost on par with Sydney, and they'd actually exceeded Melbourne's median house price until 2015. Brisbane's prices have moved a couple of percent in total, while Melbourne and Sydney have gone up considerably. So while we're not seeing the net interstate migration in these figures just yet, obviously the formula, the factors that have led to high interstate migration in the past are still, or are very evident today. So that's why we've got a heavy focus on the Brisbane market, and why we're confident of the prospects for the Brisbane market moving forward. Now, just onto the project itself. So the Albion project is 154 apartments, and it's located, as I said, 5 kilometres north of the Brisbane CBD. The project of 154 apartments actually sits just between a boutique-sized apartment and a medium-sized apartment project. So what we do, one of the things we like about this project is that when we acquired it with a planning permit, it was subject to planning permit, which has now been secured, the application included the ability to stage the project, so to split the building into 2 stages. This is really important because it allows us to sell only 92 apartments in stage 1, and because we're building less, we're not needing to draw on quite as much debt as if we built it all in one stage, and therefore we don't need to pre-sell as much to get started with construction. So that's great because it allows us to get into the project sooner, and therefore we're able to also stage the return. So in 2 years' time, we're expecting to have a capital return, and then obviously the project completion at the end of the second stage will be in 3.5 years. So that's obviously one of the key features of this project, and one of the factors that led us to this project in particular. We also have been able to secure a heads of agreement with a reputable builder. So Bloomer Construction is one of the largest builders in Queensland, and we've entered into a fixed price building contract with them, or a fixed price building contract heads of agreement that's subject to us entering into a formal building contract over the next 90 days. Now we're very advanced in the detailed design, so we anticipate that we'll be able to meet those timeframes and enter into that contract. The project itself includes a range of different product type, including 1, 2 and 3 bedroom apartments. In fact, there's a very good mix with a number of 3 bedroom apartments that are quite generous in size, and again, that's important for us because it means that we're going to attract owner occupiers. In the Albion area has a lot of people who are potential downsizers, and also the actual wages in the area of Albion, being located so close to the capital city of Brisbane, attracts a lot of buyers in that mid-income range, and again, that's quite positive for us. Now, the other feature of this project in Queensland, it's a feature that's probably unique to the Queensland market, is the ability to sell the management rights. So the management rights for an apartment project in Brisbane are the rights to manage the owner's corporation, so manage the, I suppose, the maintenance and upkeep of the buildings on behalf of the owner's corporation, but also includes a component for the management of the rental properties within the development. So we anticipate that we'll have a number of investors buying into this project, and obviously when they buy into the project, it's in our interest to use our best endeavours to have the incumbent owner manager appointed as their rental property manager. So the value on those in previous buildings and developments we've done in Queensland has been about 4 times the earnings. So in this project we've modelled it at about $1.8 million just for the management rights to be sold. And we've obviously sourced offers and information to verify that before we've adopted that in our feasibility. So onto the suburb of Albion itself. Now, again, I hope that my highlighter works here. You can see Albion is the suburb here that's highlighted orange on your screen, and you can see its proximity to the Brisbane CBD, which is the area highlighted blue. Now, what this map really shows us is how connected Albion is to a number of the strong drivers in the Brisbane economy. We have the Brisbane Airport, which is located to the top right in yellow, and we also have the Trade Coast employment area, which is a huge employer of people in Brisbane, and it's growing significantly. Now, just on the Brisbane Airport, it's actually one of the few airports in Australia that will have a second runway. It's actually under construction right now. And again, there's a lot of talk in Melbourne and Sydney about the lack of capacity in the existing metropolitan airport and the potential that they need to go and build a new airport to get a second runway. Well, Brisbane Airport has obviously obtained that approval and it's under construction now. And one of the things that you notice when you go to Brisbane is just how much work and effort they've put into the infrastructure over the last few years to cater for the future population growth that they're anticipating. Now you can see that the area of Albion is also connected quite closely to the Brisbane City Tunnel, which is the airport link tunnel that goes into the city and beyond. It's also has a train line that runs through out to the airport and to some of the employment generators I've previously discussed, as well as going up further to the northern suburbs. This green area here is actually the portside development. So that used to be it was the former docklands, and they're going through a major redevelopment and urban renewal to introduce new commercial, retail and more apartments and higher, I suppose, amenity and employment generators through there than what was previously located there. Another thing that's been in the media lately in Brisbane is that the state government has just awarded a new casino licence, and this area here in light green, where my highlighter is the Queen's Wharf redevelopment area. So the new casino is anticipated to cost about $3 billion to construct. It's obviously going to introduce a lot of new employment to Brisbane, and also it's going to be a real key for attracting more visitors. Now, Queensland already attracts a lot of visitors, and the tourism market is obviously a very fast growing market in Australia, and obviously to pick up the extra piece of the puzzle and get a bit more market share, this casino is going to do wonders for the Brisbane economy. Now the project itself, sorry for jumping around a little bit there on the screen, the project itself you can see here is centrally located in this picture, and you can see 31 Dover in the green box that's at the bottom. So that's the site itself, and you can see just how close it is to the city. You can see the transport linkages all around that suburb there. Fortitude Valley is one of the real hotspots for nightlife and restaurants in Brisbane, so located just 3.2 kilometres from Fortitude Valley, but obviously enough distance from Fortitude Valley that it doesn't get caught up in that nightlife scene. So Fortitude Valley has a very high demographic of people in their 20s and early 30s, whereas the Albion market really has a slightly older demographic, and that's obviously a good thing in terms of value in future. Now you can see here that it's located in a small precinct of apartments here, which is actually sort of medium-rise development. They've got a maximum height of 6 levels through this area, and you can see that it's largely built out now. There's a couple of projects in this photo that are under construction. This photo was taken a few months ago, but you can see that a lot of that development's already taking place or has taken place. So there's relatively few new sites that are going to come to market in this little precinct here. Over to the right of the page, and it's just sort of moving off the page, is the Albion village, and that's a town centre that's being refurbished at the moment. There's a lot of new retail office buildings going in there, as well as some new apartment projects that are going to really lift the standard in the area, and those apartment buildings are priced at an absolute premium to the rest of the market, which we see as a good thing for our project as well, demonstrating the value in our apartments. The property itself, or the project itself, and I don't expect everybody to be able to read the sizes of these apartments, but just to give you an indication, the pink are 2-bedroom apartments, the purple are 1-bedroom apartments, and the yellow are 3-bedroom apartments. So you can see that there's not an oversupply of 1-bedroom apartments in this project, as I suppose a lot of developers have received a bit of criticism in recent years for putting too many small apartments in, and these are quite generous apartments. So a number of 3-bedroom apartments as well. But what I wanted to point out with this picture is obviously the staging of the projects. We'll have 92 apartments in stage 1 and 62 apartments in stage 2. The top left picture shows levels ground to level 2. And you can see when you move to the right-hand picture there, that as the building goes up, it actually steps back. So that ensures that it's a less imposing form on the streetscape. And then you can see that there's a level 6, which is only to the northern side of the property. And that's obviously because the land slopes up a little bit more that way, which allowed us to get an extra level on that part of the development. You can also see that there's a very large space, I suppose, that the project or the building wraps around, and that will have a landscape pool, communal areas, barbecue, seating to catch up with friends, all of the typical amenity that we put into our projects to make sure that we're providing just that little bit more than our competitors. Again, just the last picture on this project, you can see here that the front few levels sit forward, not an overly imposing structure there, and you can see at the back the extra, the higher part of the site. Now that's obviously set back about 30 metres from the street, so it's been well designed here to make sure that it gives plenty of space and the feeling of spaciousness as you enter into the development. Now onto the financials. So just looking at this from the fund's perspective, and obviously there's a fair bit of detailed information in the product disclosure statement, a financial forecast that shows the whole project feasibility. So you can see in that product disclosure statement our assumptions on construction cost, our assumption on revenue, assumption on sales rates, timing, marketing expenses. It's a lot of detail. So rather than going through all of that tonight, obviously I recommend that you have a look at it in your own time. If you've got any questions when you're going through those figures, obviously our investment consultants are here to help you with all of those questions and make it as easy as possible to run through. But just from a fund perspective, where the offer is for 5.5 million units at $1 each. So we're raising $5.5 million. The first capital return is forecast to be in March 2018 at the end of the first stage of the project. And that capital return is anticipated to be $3.8 million. That's a mixture of initial capital as well as profits from the first stage. And then the final return will occur at the end of stage 2 in July 2019. So about just a touch over 3 years from now. And that capital return will be $5 million. So that adds up to a total returns of $8.8 million. Now keep in mind obviously that the initial capital is included in that. So it's about $3.3 million in profits coming in above the capital return. So on a dollar basis or a dollar per unit basis, that's $1.60 per unit that you're getting back, and you're investing $1. So that's a 60% return that we're forecasting on the initial investment. Now, because there's stage payments, that actually equates to, or the return equates to, an internal rate of return of 19.54%. And for those that might not be familiar with the term internal rate of return, or IRR, it effectively is the compound rate of return that you're getting on your investment. So you're investing $1 today, you're getting what will equate to, let's say, 40 cents per unit. In 2 years' time, you're getting $1.20 or so a year and a bit after that. Now, when you work out the annualized return, it comes back to 19.54%. Now, I should point out that all of these returns are net of fees and charges. So that's what you're getting back, $1.60. And the $1.60 is obviously part of it's taxable and part of it's capital that you'll be receiving as well. So I guess the goal of any developer is, or any investor, is to achieve the maximum return that we can achieve for the minimum risk. Now, in property development and these types of investments, there are obviously risks that we're taking on, and there's a section in the product disclosure statement that sets out many of the risks that we've already envisaged for this type of investment. And quite often we've also got mitigating factors that we feel that we can manage through those risks. But it's important to understand those risks and obviously assess the returns of the project in line with the risk that you're taking on. Now, we put a lot of analysis and due diligence into every acquisition we make prior to even committing to buying a project. And then once we've bought the project, and in this case, in preparing the product disclosure statement, we also go through extra due diligence, and we all have to be assessed by independent experts. So this has passed through a due diligence committee that's included an independent lawyer and an independent accountant. So they've reviewed all of our assumptions to make sure that we're making reasonable assumptions and that we're making valid statements. Now, in terms of managing risk through a development, one of the keys is obviously trying to limit your construction costs. So in this case, we've already entered into a heads of agreement with a builder. So that's locking in a build price. So from a construction pricing perspective, we're very confident on the construction prices that we've used in our feasibility. Now, nonetheless, there are extenuating circumstances that sometimes arise. So again, we've modelled and included a contingency of 5% on top of the construction contract, and we've also included a contingency of 5% on all of our other soft costs. Now, soft costs are things like marketing, things like professional fees, architects, engineers, and other costs associated with getting the development ready to market. So we've got a 5% contingency on all of the variable costs in this project. Now, in addition to that, we also model, and it's included in the product disclosure statement, as a set of sensitivity analysis. So what we do is we stress test the project. We run through the scenario that construction costs might go up by 5%, or revenue might fall by 5%. And we run those against each other and look at the various scenarios to ensure that we're preserving capital and making a return in each of those scenarios. So obviously it's a key thing for us to stress test the project before we even present it to our investors. So again, in our product disclosure statement, that's disclosed. And again, if you have any questions, our investment consultants can run you through the process we've used and explain how the tables should be read if there's any ambiguity. We also try to use conservative budgeting, and as I said, we need to pass this through an independent accountant. So they are very critical of all of our, I suppose, analysis, and make sure that everything that we do, we can verify. So we obviously want to deliver a great outcome for everybody. So we make sure that the numbers that we're putting in are achievable. From a gearing perspective, we also like to buy sites without any debt. Now, the reason that that's important is that if we own the site and we get delayed or something happens, that there's no bank knocking on our door asking us to hurry up. We control the site, we control our own destiny. So it's absolutely critical for us in our acquisition strategy that we buy land unencumbered. Now we do take on debt once we start to get into our pre-sales and nearing commencement of construction. We start to take on the debt, and we generally fund all of the construction with debt. So in this case, our forecast loan to value ratio reaches a peak of 62% just before the completion, or just at the completion of stage 1. Obviously the sales revenue that we get pays down that debt and puts surplus cash in the bank. The other thing that's important to understand there is that we don't actually start construction and start taking on that large debt obligation of construction until we've pre-sold enough apartments to cover all of the debt. So know that when we're starting construction, we already have enough sales with 10% deposits down that we're going to pay off all of the debt as soon as we finish construction. So again, we're not taking on the extra risk of trying to sell during the construction process or after debt has come on, and we're controlling our own destiny, managing that risk. Again, this site has a development approval, so a very strong bonus. Obviously, whenever you can secure a site that the development potential is certain, it's always advantageous. So again, one of the features of this project is that we have the development approval, or DA, in place. And I've already stated that the financial feasibility is verified by an independent accountant, and that accountant is Moore Stevens. So they've worked with us on a number of our product disclosure statements, so you might have seen their name in the past. They're also the auditor of OpenCorp Funds Management and our license conditions, as well as our retail funds. Now, in terms of ongoing reporting, and this is, I suppose, one of the things with OpenCorp is that we try to be as transparent as possible, and that transparency comes through in our offer documents, the product disclosure statement that you will have received. But it's also imperative to us that we report regularly to our investors and provide as much information as is necessary to make sure that you're informed and you're comfortable with the way that we're managing the project and obviously your investment. So on a quarterly basis, we get out one of these reports. So this is just a typical report for one of our projects. You can see that we include a developer program. Now, what you probably won't pick up on the detail here is that when we run through a program, which obviously includes settlement on the land, sales commencement, construction commencement, completion of the project, we include the base case. So what did we disclose in our original offer document? We also show in each quarterly report, what did we tell you last quarter? What was our forecast last quarter? And what's our current forecast? And we provide a variance analysis against that, against obviously the base case and the last. So what you can see there is, have things changed since you first invested? And have things changed since the last quarter when we last updated you? And we provide reasons for any variance. So you can see, obviously things do change from time to time, and we try to disclose what's caused any delays so that you're aware and you're informed for the future. Sometimes the changes are favourable. Sometimes we can reduce the duration of a project. Sometimes it's a delay in the project, but we disclose all of those things. We also include a set of financials, and again, we include the original and the last report as well as the current budget, and we show you what's the forecast today relative to the original budgets, providing explanations for any changes and obviously any improvements or any areas where we might have seen higher costs perhaps. We also provide a sales and marketing summary, and the last page on the right hand side is a set of project controls. So for those that haven't invested with us before and haven't seen one of these reports, the project controls is really key for us, and it also ties in closely to the product disclosure statement and the risk identification. So in trying to mitigate risk, it's obviously important that you identify risk as early as possible, and in knowing that there's a risk, ensure that you're putting practices in place to manage that risk and try to avoid it. So we disclose on an ongoing basis any risks that we see coming up. Some of those risks might just be potential that we have to build an extra 20 metres of sewer out the front costing $40,000. If we've identified that, then obviously we disclose what we're doing to try to avoid having to spend that $40,000. We also, at the bottom of this page, in some circumstances, we see opportunities to either save money, which sometimes we can, for instance, gone back to council in the past and negotiated to reduce our statutory charges, which are sometimes called headworks, and we disclose that as an opportunity, and we update you as we're going through and working towards trying to maximise the outcome for the project until we've, I suppose, reached a dead end in that opportunity, or we've achieved a favourable outcome, and then obviously we close that opportunity out and focus on the next. So if you do wish to invest, there's a bit of an application process to go through, and obviously our goal is to try and make it as simple as possible. Now, I mentioned at the start, the product disclosure statement is a very detailed document. There's a lot of content in it, and that's absolutely imperative that we disclose all of that information. There's also, in the product disclosure statement, if you have read the PDS, and there's two parts to this PDS, there's a part A and a part B. There's a very detailed application form for the part A, and a much simpler application or transfer form for the part B, which is relevant to the Albion project. Now, one of the reasons why we have set up what's called the Open Access Fund is because we wanted to simplify the process of investing in our projects. Now, we still do need to go through one detailed application where we identify each of our investors, and again, that's important from the perspective of the, I suppose, anti-money laundering and counter-terrorism funding, to use the technical term, that it's a condition that we identify all of the applicants in our funds, and that we identify obviously that they're residents, and they disclose certain information such as tax file number and identification details. Now, once you've gone through that process once, you don't need to go through it again anymore. So I'll just run through quickly the structure of the process for investing in the Albion project. So we now have the Open Access Fund, which is open, and what that allows is investors who wish to be a member of the Open Access Fund complete their application form and invest their money, and that money is invested initially in cash assets, so short-term deposits with 30-day maturity. The reason we have it in 30-day maturity is that we want to make sure it's highly liquid for you if you do wish to roll into a project or to reduce some of your investment. We charge no fees to get into the Access Fund, and we charge no fees to manage your money while it's in the Access Fund in the cash units, and we charge no fees if you wish to exit the cash class of units. So again, it just provides a very safe, stable return of between 2 and 2.5%, which is about the cash rate, while you're waiting for a new project to be presented. Now, as I said, you fill out your detailed application form to get into the Open Access Fund, but once you're in there, the process to get into a project is very, very simple. It's just completing the transfer form that's at the back of each Part B PDS that we'll issue to you. Now, in this case, obviously, you've got a Part B PDS for the Albion project. So if you've invested, for argument's sake, $100,000 in the Open Access Fund, and you say, I'd like to put 40% of that investment into the Albion project, you complete a transfer form and you specify the $40,000 that you wish to invest into the Albion project, and that moves across into the Albion project and becomes your application for an investment in that project. In a few months' time, we may have another project that we present as a Part B PDS, and you may decide that you wish to invest some more money into that. So you might say, well, I'm going to put half of what I've got left in the cash class into Project 2. So of the $60,000 left in the Open Access Fund that's uninvested, you might choose to put $30,000 into Project 2, and then as Project 3 comes along in the future, you might put another $30,000 in there. Now, I just want to point out that that's just an example of how the fund works and the process itself of investing and moving into different investments. I'm certainly not using those figures as an indication that's how much you should invest and how to, I suppose, diversify across each of the projects, but it's just an example. And I suppose one thing I can say is that we do recommend diversification across our projects. One of the keys to this fund is that we had a lot of investors that obviously are across a number of our existing projects, and they wanted to be able to simply and easily invest in each of the projects and diversify geographically as well as across different product types. So again, when I've quoted past returns earlier in the presentation, those past returns obviously apply as an average, which means that if you're invested in each of those, if you invested a dollar in each of those projects that we've completed, your return would have averaged 24%. But if you had have just invested in one, and that project might have returned less than 24%, while another may have returned more. So obviously the benefit of diversification is that it smooths out your returns. So timelines. Now the offer is open for the Albion project, and it closes on the 8th of April. So that gives you about 3 weeks. Now, I suppose the time frame itself may seem short to new investors. Those who have invested with us in the past and are familiar with the process should obviously understand that a lot of our funds do close oversubscribed. So it is important to try and get onto any queries that you've got as early as possible. Talk to our investment consultants, talk to your own advisors to try and work through those. We appreciate that it does come over the Easter period, and some of you may be taking a break at this time, but as we would expect, we would generally expect that the fund will close on time. We have some flexibility to move it out if necessary, but historically we've oversubscribed our funds. Now in this case, while we're raising 5.5 million as our target, there's some flexibility to increase that to $6.5 million should we have an oversubscription to avoid scaling back any investors as much as possible. So the oversubscription amount of the extra $1 million, that's also disclosed in our product disclosure statement, and you can obviously see the returns are very similar to if we just do the $5.5 million. I think at the $6.5 million subscription, the return goes from 60% to 62% profit. Now, in terms of timeframes, once you've invested, we settle on the property in May. So we're not wasting any time with this one. We settle in May, and we anticipate commencing sales in July. So we're obviously underway with our brand development at the moment. We're working through the detailed design to ensure that we're just maximising each of the floor plans. As you know, we bought this with an existing development approval. So we're just tweaking some of those floor plans to make sure that we're maximising the value of each of them and ensuring that we're able to treat the facades and do all the little bits and pieces extra that we like to do to make sure that we've got a very, very marketable project. We anticipate hitting our pre-sales target and commencing construction in October of this year. So that obviously means from the 92 units in stage 1, we anticipate we'll probably sell about 60 of them to cover our pre-sale or our construction funding. And that 60 sales obviously going to occur over 3 to 4 months. So about 15 sales a month, which is consistent when we're launching new projects, and obviously our historical results are consistent with that. The first return on investment at the end of stage 1 is in March 2018. So it's about a 16-month construction period for stage 1. And then obviously stage 2 construction commences pretty much straight after stage 1 has concluded and we've received settlements. And stage 2's construction will be slightly shorter than stage 1 because a lot of the work at the basement level and dealing with ground conditions is already done with stage 1. So final return on investment and capital will be in July 2019. Now, just wrapping up, obviously there's a lot more detail in the product disclosure statement. I could talk all night about that, but understand that everybody's busy. So tonight we just wanted to cover some of the key features of the investment so that you could decide whether to, I suppose, investigate further or whether you wanted to seek further information. And hopefully the language I've used and the diagrams and illustrations have made a very clear picture of what this investment is about and how to go about investing. It's open now. You can invest using cash. You can invest through a family trust or a unit trust or through a self-managed super fund. That's we do get a lot of questions about whether you can invest in a self-managed super fund, and you certainly can. But again, we suggest if you don't have a self-managed super fund that you get independent advice about whether setting one up is right for you. So I suppose in coming to this point, one of the common questions the most common question that I get is, I'm interested, what do I do now? And as I've explained, we do have an application form in our product disclosure statements that while it's not cumbersome, it does take some time to process from our end, obviously checking and verifying all of the information that you've included on that. So the offer for Albion closes on the 8th of April. So what I'd suggest is that you don't wait until the 6th of April. If you are interested, get on the phone or shoot an email to our investment consultants. Start to raise any questions that you've got, and hopefully if you've had any questions tonight, you've either noted them down or you'll be shooting me through a query on the webinar form. But yeah, get through those questions as early as possible, because if you're waiting until the 6th of April, there's a good chance it's going to be too late for you, and historically we have closed them on time and oversubscribed. Probably the most important thing I'd like you to take out of tonight, and probably in dealing with OpenCorp, is that while this might be a new type of investment for you, it's something that we've been through a lot of times before, and we've also spoken to a lot of customers and talked them through it and simplified it for them. So our job is to help you to understand and make it as easy as possible. As I said, we can't give you personal advice as to whether it's the right investment for you, but we can talk all night or all day about the investment itself and about our product. So any question that you've got about the project, about the fund, about the process of investing, our investment consultants will definitely be able to help you with that. So thank you for attending this webinar, and I look forward to speaking to you in the future.